So picture this. You've been grinding at that part-time job between classes, or maybe you finally scraped together some cash from a summer gig, right? For the very first time, you've actually got a little savings account and you're thinking, okay, time to start investing. Well, welcome to The Explainer. I am so pumped you're here because we are going to tackle a massive hurdle today. You pop open your laptop in your dorm, ready to put that money to work, and boom, you are instantly hit with this absolute tidal wave of conflicting advice. Where do you even begin when you're just starting out? Today, we're going to decode all that noise and give you a crystal clear roadmap.
Okay, let's dive right into this. Here is our agenda. First, we've got the beginner's dilemma. Then, we'll look at stocks as the family car, crypto as the sports car, and Forex as the Formula One machine. And finally, we'll map out your beginner investing roadmap.
Part 1. The Beginner's Dilemma. Navigating the noise. It is just so easy to get caught up in the hype, isn't it? You hop online and one expert is practically yelling that stocks are the only safe way to build wealth. Then, literally the next swipe, some influencer claims crypto is the future and it's minting overnight millionaires. And just when you think you've got a handle on it, a Forex trader pops up promising you can make $1,000 a day from your laptop before you even hit the dining hall for breakfast. It's wildly noisy out there. And it all usually kicks off when you type this exact question into the search bar. How do I make money investing? Now, it's the most natural question in the world. Every single student, every beginner asks it. But here's the hard truth. It's actually the wrong path. When you're working with a tight college budget, choosing the wrong market, just chasing fast cash, that can cost you dearly. It can wipe out your hard-earned savings before you even learn the absolute basics. So the crucial point here is that we need to completely flip your mindset. The wrong question to ask is, which market makes the most money? The smart question, the one that is actually going to build your lifelong financial confidence, is, which market teaches me the right habits? Because let's be real, investing isn't just about making a quick buck. It's about fundamentally learning how money actually works. We've got to stop chasing that overnight hype and start building a rock-solid foundation for your future. To really wrap our heads around this, let's look at a driving analogy. Imagine you're learning to drive for the very first time. You wouldn't just jump straight into the cockpit of a Formula One race car, right? No way, you'd crash instantly. You start with the basics to build up your confidence and understand the rules of the road. Well, investing works the exact same way. Looking at our breakdown here, stocks are your dependable family car. Crypto, that's the flashy, high-speed sports car. And Forex is the incredibly complex Formula One machine. Let's break down how these vehicles actually compare for someone with a beginner's budget. Chapter 2. Stocks. The family car, building the foundation. Okay, let's take a breath and slow things down a bit. When you are brand new to investing, this right here is the absolute smartest place to start. Now, I know it might not feel as thrilling as the other stuff on your feed, but this is your foundation. This is where you safely learn the rules of the road. So what does it actually mean to invest in the stock market? Well, when you buy a stock, you aren't just trading random numbers on a screen. You are literally buying a small piece of a real functioning business. Think about the companies you rely on every single day: Apple, Microsoft, Amazon. Every share you buy represents actual ownership. Stocks aren't necessarily flashy, but they reward patience and consistency. Because as those real-world businesses grow over time, your investment grows right alongside them. Let's look at a totally realistic example for a modest college budget. Imagine taking just $500. Maybe that's what you managed to scrape together over an entire semester, and investing it into a diversified stock index fund. You aren't chasing hype, you aren't bouncing around between crazy trends, you're just being consistent. Over time, compounding starts doing all the heavy lifting for you. It's wild to think about, but the stock market has created more long-term wealth than almost any other asset class in history. And that's not from pure luck. It's because regular, disciplined contributions slowly build massive financial momentum. And this brilliantly illustrates why stocks are just the perfect training ground. Check out the essential lessons they teach you: patience, risk management, long-term thinking, understanding business fundamentals, and dealing with market psychology. When you master these specific foundational habits in the stock market, you are totally setting yourself up for success. Because once you get these concepts down, every other market, no matter how complicated it seems, becomes so much easier to navigate. Honestly, without this foundation, everything else kind of just feels like gambling. Let's shift gears for section 3, crypto. The sports car, hype, and volatility. But hey, I know exactly what you're thinking. What about the fast money? This is where the pace picks up. The sheer excitement surrounding digital assets and crypto is intense. And let's face it, it's practically impossible to ignore when you're a college student surrounded by the internet screaming about instant wealth. But crypto is very, very different from stocks. Instead of owning a piece of a company that has quarterly earnings and physical products, you're buying digital assets. Now, sure, some of these cryptocurrencies aim to solve real-world problems or power decentralized networks, but let's be real, some exist purely because of internet hype and usually feature a picture of a dog. But the attraction is obvious, right? We've all heard those crazy stories of assets like Bitcoin starting from absolutely nothing and generating massive, rapid wealth for the early adopters. It's this number right here that sucks millions of new investors in every single year, 500%. The possibility of watching your small savings account shoot up 500%, that extreme upside triggers intense FOMO, the fear of missing out. It feels like everyone else on campus is getting rich driving a sports car while you're stuck puttering around in the family sedan. It heavily rewards a high risk tolerance.
But here is what those flashy hype videos rarely ever show you. 70%. That exact same asset that can skyrocket 500% can just as easily plummet 70% or even more. And when a market crashes that fast, emotions completely take over the wheel. Fear, panic, regret. Just imagine taking your hard-earned summer savings and watching it lose more than half its value in a matter of days. That is exactly why so many beginners end up buying at the absolute peak of the hype and then panic selling at the bottom.
This quote really hits the nail on the head. Crypto isn't necessarily bad, but it requires emotional control. If you haven't built up your foundational investing habits yet, that level of volatility is going to test you in ways you are just not prepared for. Most beginners, especially when working with a tight budget, simply haven't developed the emotional discipline required to stomach a 70% drop without totally panicking. It's a sports car. It goes incredibly fast, but man, it is so easy to crash if you don't know what you're doing.
Section 4. Forex, the Formula One, the 24-hour giant. All right, now we reach the most extreme end of the spectrum. If stocks are the family car and crypto is the sports car, the foreign exchange market is the Formula One machine. It is massive, it is lightning fast, and it requires intense skill and discipline. Forex is literally the largest financial market on Earth. We are talking about trillions of dollars moving daily between global currencies, like the US dollar, the euro, the yen. And because it operates across global time zones, the markets are open nearly 24 hours a day. Prices are just constantly moving. So to a beginner staring at a screen in their dorm room, it looks like this endless, round-the-clock opportunity to pull quick cash right out of thin air.
Now, what's really interesting about this slide is this one critical concept you have to understand: leverage. Leverage allows traders to control huge amounts of money with only a very small initial deposit. I mean, it sounds amazing, right? But here is a stark warning. This exact mechanic is why so many beginners completely wipe out their accounts. Yes, leverage magnifies your profits, but it magnifies your losses just as aggressively. A tiny, tiny mistake in a leveraged trade can literally erase weeks of gains in seconds. That is exactly why such a huge percentage of retail traders lose money here. They completely underestimate the risk of driving a Formula One car without any training.
Section 5. Your beginner investing roadmap, the path forward.
Let's move to our roadmap and see how this all builds together. We've looked at the slow and steady, the flashy and volatile, and the highly complex. Now it's time to consolidate everything you've learned today into a clear, empowering action plan, one that actually protects your savings while building your skills. Here's how we turn all of this into a sensible progression. Step 1. Start with the family car. Learn stocks and long-term investing. This is where you build your patience and really understand business fundamentals. Step 2. Once you've got that solid foundation, then you can explore crypto carefully, keeping it to just a small, manageable chunk of your portfolio. And Step 3, approach Forex much later, and only after you deeply understand risk management. Following this progression ensures you aren't just gambling, you're actually learning.
Look, markets are always going to change. Crazy new technologies and hyped-up trends will constantly pop up on your feed. But strong financial fundamentals, those will never go out of style. Building wealth isn't about finding the fastest market. It's about building the strongest habits right from the start. So I'll leave you with this question. If you had to choose just one market to learn today to take that very first step toward lifelong financial confidence with your savings, would it be stocks, crypto, or Forex? Start with the basics, master the habits, and enjoy the ride. Thanks for joining me on this explainer.